Welcome to the Sykes & Company PA video blog.
That's a good question. Payroll typically is the second most important thing involved in an operation of a pharmacy, in that we believe that gross margin is the single most important issue. Once you get beyond maximizing your gross profit, what you'll begin to look at are the operating expenses that you have in that pharmacy. Now, obviously, the payroll, you have payroll taxes, potential payroll benefits, whether it be medical insurance, whether it be retirement plans, or whatever the case may be. What we have noticed is that our high performers have payroll, generally speaking, under 10% of total accrued revenues for the W-2 payroll amount. Payroll taxes, which is generally FICA taxes, Social Security taxes, will generally be 0.9. That's 0.9 of 1%. Generally, most of the pharmacies we noticed on the medical insurance front will pay 1/2 of the insurance for the employees only. In many cases we run into during transitions, we find where the entire family may be paid for by the pharmacist owner, in addition to other benefits, whether it be a 401k, a simple plan, other kinds of retirement plans that are there. But you've got to be very cognizant of what those payroll costs are, because you can move the needle on your bottom line by changing a number of these items during a transition. Another thing you want to be very careful of is whether you retain all the employee force or not in a transition. You want to ideally interview each and every employee that's working at the existing pharmacy. You want to make sure there's a good fit, both from a personality perspective and from other perspectives. But retaining all the employees generally is not a good thing to do. Making decisions to let employees go later is generally not a good thing to do. The time to make changes is typically when the new sheriff comes into town. That would be you, being the buyer in this transition. That's the time to understand and make the necessary changes in that particular area. Kathy, can you think of other issues that we generally deal with in the payroll area?
Well, making sure that payroll is properly addressed as far as payroll returns, making sure those payroll returns have been accurately filed, making sure that your staff that you're inheriting has been paid properly, as far as somebody coming back on you for overtime compensation, sick leave issues, because you're inheriting that situation. You want to make sure that you're protected and that your contract to buy protects you from anything that the prior owner may have done that was not accurate or correct.
An item like a 1099 independent contractor could be an issue too there.
Yes, we run into that all the time, where pharmacies have staff coming in as an independent contractor. They're providing them with the tools to do the job. They're telling them when to show up. They're telling them what to do. Those are 3 of the 20 questions that the IRS uses in determining whether you have an employee-employer relationship or a contract labor relationship. Those situations that you might be inheriting could cost you tremendously in back taxes and benefits that you have not addressed with that contract labor individual. So looking at those situations very carefully, making sure you're fully apprised of the status of each member in the store prior to the purchase is going to benefit you tremendously. Making sure you've got a good cohesive team going into that process, and as Ollin said, addressing the wages of those staff members as you, the new buyer, hire them the day you take over, can save you a tremendous amount of money.
Thank you for watching. If you enjoyed the video, we invite you to subscribe to our YouTube channel.